We hope that you caught some of these great moves into OPEX. We had said that we were going to defend the 5600 area. If we broke out of 5830, we were going to 15917. And if that broke out, we were going to try to inch up to about right here. I said 5980, 60, 50 possibly. And what we're waiting for is a break of this trend line to back test, and that our pivot was coming. Our pivot was Wednesday, actually Thursday the 22nd into Monday the 19th, with a downside target possibly into the 22nd, a shallow downside into the holiday weekend. So what could possibly happen here is that we can still come up to about here possibly, or now that we have that Moody's downgrade on the double A bonds into the market could come back 5830, break that down, test support here around 5771, which is support here. It could break down even further, come back and test 5683 or 5661. I'm going to take it that this is going to be a shallow pullback here, let's say 5771. Then the market's going to come up to 6220 by the June OPEX. And then our goal, then again, come down a little bit into the first week of 4th of July. I actually expect to be a deeper sell-off into 4th of July. So 4th of July, I want to be around here, the 5,500 area. And then by the July OPEX, back test this trend line. And that should be about it for the run. So that's kind of the path I'm looking at now. It can go a little different where the market decides to not reject here, come back shallow to the 5800. But there's some dark pull prints that tell me that 5771 is going to come back. Ideally, I mean, we want to come back and retest this sort of trend line here at the 5300 area, which is this sort of, so this was the bull flag. This trend line would defend that bull flag, come out here, come back and retest this trend line up here, and then reject, right? That's another possibility that we can get, but all depends on how the market makers treat the news about the downgrade. We're seeing it after hours that it's bleeding. Again, next week is typically profit taking. So typically we see there's a little resistance, maybe, like I said, a final pop up, Monday morning, trap, any bears or any bulls, and then start the seasonal rollout. So usually by May 22nd, we're retesting a support, breaking down, possibly finding some liquidity, and then finishing, the May run, and then bullish into July. What's going to happen is I think the market's going to want to come back up to around here, a sharp rally, trap a little bit more into July 9th, which is my next pivot. The market is probably going to underestimate CPI, and then that's going to cause, a nicer drop in Q4. Again, come down into about 4th of July, somewhere around here, 5,500. I want to see actually a little lower. I would love to see this trend line hit and come in deep, 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 or just come in around here and then take off. But again, one level at a time. Let's see if we break down under 59.17. That's your short back to 58.30. Back to 57.71. And you want to trail your stops because seasonality is still very bullish. All of this was a bullish breakout, and we're doing an inverse head and shoulders. But again, we're overextended. The market has to take some profits a little bit into a 3-day weekend, but we're not going red into Memorial Weekend. It hasn't happened in 21 years. If it happens now, it's the first. And then markets will take profits after the June CPI hit. So one trade at a time. If you want to learn our method to our madness, comment course below or email us, and we'd love to show you exactly our methodology and our seasonality, our AI, and how we beat the market and get into some of these trades, how to get into the shorts properly, how to go long, and how to manage risk.